Big day for the market today. You had the Nasdaq up 0.7%. You had the actually the Nasdaq was up 1.7%. You had the S&P 500 and the Russell 2000 both marching higher in lockstep at 0.9% on the day. So pretty good, strong day just ahead of when all the big banks start to report their earnings tomorrow. We're going to see JPM, Wells Fargo, STT. We're going to see a lot of different banks start to set the stage for what the earnings season is going to be like. So there's going to be a lot of eyes on that, focus a lot of attention on those numbers, whether or not they're beating earnings and revenue and what kind of guidance that they have. And you got to remember, you had the big regional bank fallout just back in March. So how's that hit the numbers going into the quarter two that they're going to be reporting on? So keep a big eye on that. And then the following week, that's where you start getting into a lot of your tech plays. That's where you're going to see NVDA or Tesla and Netflix starting to report numbers. And then after that, you're getting into all the other big tech plays. So it's going to be busy, especially the last week of July, first week of August. That's where most of your stocks will be reporting earnings, the large majority of them. And one of the big things that you want to be doing is making sure as a swing trader that you're not putting yourself in very risky positions. For me personally, I won't touch a stock that has earnings coming up. I will trade a stock outside of a week, and then but I will not hold it through earnings. And that's important because really, if you start trying to swing trade a stock like a day or two before the earnings come out, what's your window of opportunity if you don't plan on holding that stock through the earnings? So it makes a lot of sense to avoid from a swing trading. Now, from a long-term standpoint, you can't really avoid earnings season, but I mean, you could, if it's going to be a long-term trade, you got to hold it through it. But from a swing trading standpoint, it makes a lot of sense because you're looking to be consistent on trade after trade after trade. Yes, you're going to have losers along the way, but you want to be managing the risk. You don't want one trade out of 200 to just tank your hopes of having a good year. So in this video, or in this live stream, actually, later it will be a video, we're going to be going through the whole market going into earnings here, what to expect. And we're going to look at the individual sectors. We're going to try to evaluate where are the trade opportunities at, because right now you're seeing a lot of stocks, once again, getting very stretched to the upside. That's limiting some of the plays that I'm seeing out there. So we want to be cognizant of that as well. Meanwhile, post your charts, not your charts, but just post your questions, your stocks that you want me to look at, and I'll do a chart analysis of all of them. I go through every one of your questions here, and as long as you guys are posting them, I'll keep going through them. So let's go ahead and get right into this madness here. First up, we got SPY. And SPY, since we last talked, we mentioned about the cup and handle pattern, mentioned that there was some promise there for a breakout. We got the breakout yesterday. We got it from a gap higher, so it didn't even really test the resistance. It just blew right through it in overnight trading. And then we got the follow through today. That's all very good. That's stuff you like to see. We're getting a little bit into overbought territory there, where we're seeing a 90 on the stochastics. If you look at it from a weekly, we're sitting at a 93 on the stochastics, almost 94. And then on a monthly, we're seeing a 94 as well. So we got to be very careful that we're not loading up the portfolio too much, that we're still taking some profits along the way and managing the risk. So with that, we talked about the 20-day moving average. That has offered up some support. One thing that's a little bit of a concern here is with the gap from yesterday. We definitely have one that we need to be aware of going into the week ahead and going into tomorrow with earnings season. That usually gets filled. We still have others when you go back to June 2nd that has not been filled, but by and large, these gaps do get filled. So just like what we saw with this gap here from June 30th, it got filled. I would not be surprised to see at some point in the next week or two to see this gap get filled, which would mean there would be a pullback of some amount. Then you got the Qs. Looking at the Qs here, you had the same kind of a gap. But what I like about this one a little bit better than the other one that we just talked about is that this one filled most of the gap from where it opened up. It didn't fill all of it. I think the market can look past it and keep moving higher. But overall, though, more than likely, that's going to get filled too, especially if the SPY one gets filled. It's probably going to take the Nasdaq with it as well. And then we have IWM. We got some gaps there as well. It's up 5 straight days. I think it's up 10 out of the last, or 11 out of the last 13 days. So it's been a really good move for IWM. If we could have avoided these 2 days of selling here that were pretty substantial, it could have been a really nice move in general, but you're always going to have pullbacks in stocks. So what can you do? Like I said, you have the gap right there. You also have some resistance overhead as well, going back to April of last year. This is really the biggest thing that I'm watching right now on the Russell, is this huge layer of resistance. This is what I want to be most concerned about, because we're getting really close to it. We're at 193. It starts at around 195 to 196. That's where it could break down at. If it can push through it, then it really opens up the window of opportunity for a move to 198 to 202, and then from there. But these layers of resistance, like the previous highs that were formed back in February and the ones from August of last year, they're not what you would call heavy layers of resistance. So I think it gives it a huge opportunity for it to have a substantial run, like we've already seen with S&P and with the Nasdaq. And then you got the VIX. Looking at the VIX here, we're seeing a little bit of a bottoming process that might be trying to take hold, because the markets were up substantial today. And what did you see out of the VIX? It was up 0.4%. So there was definitely a divergence there where the volatility picked up a little bit on the VIX, even though the S&P 500 and the Nasdaq and the Russell, they all finished substantially higher. So there's that divergence you want to be aware of, because usually after we get the kind of pop that we got back on July 6th, it's usually just unfettered selling thereafter, and it usually takes us to a new low. So far, we're not seeing that, which is a little bit of a concern. If you're a bull, you should be aware of that. Now, let's go look at some of these sectors here. And I think what you're going to see is there's a lot of sectors just really running hot here. So starting off with communications, this was your strongest sector of the day. This is going to have your stocks like Meta in it. It's going to have Google. Really strong. And you can see over the last 3 days, it has just absolutely rocketed higher. And why is that? Because it finally joined the party. And it's kind of annoying that it did, because it stopped me out before it actually did that. That was a real frustration, because if you don't look at the last 3 days here, when you look at these charts, and this is what we have to do as technical and analysts, we can't assume that we know what's going to happen in the future. We have to look at what the chart's trying to tell us right now. And when you're looking at this, it looked like an inverse head and shoulder, or inverse cup and handle pattern. And that wasn't a very good sign. It was already starting to break down a little bit there. Broke below the 50-day moving average, which it had done a good job in the past of holding. And then just really almost out of nowhere, last 3 days, just absolutely monstrous for the stock, jumping almost $10 a share. So that's the kind of stuff in trading that can be really frustrating, but it doesn't mean that you become undisciplined in your approach and say, you know what, I'm not going to let that happen again. I'm just going to stop using stop losses. You had to use it. And that's part of it. Of using stop losses, is doing it when it's not convenient, or when it's like you feel like you're getting screwed. So Google doing a really good job of pushing XLC higher. So is Meta. I mean, Meta's taken off as well. It's up at 313. I thought it was an achievement just to hit 300, quite honestly. But XLC doing really well here. So then what about XLK? This one looks, but believe it or not, the tech sector looks a little bit more rational at this point in time. You had the breakout of this continuation triangle to the upside. That was really nice. Always cool to see the technical patterns play out almost in textbook fashion. And that's what it did here with XLK. That one still looks pretty strong. You have XLY, which is, I think this one's up like, what is it? Yeah, it's like 11 out of the last 12 days. That's a lot. I was trying to do the counting there. That's why I seemed a little hesitant to give you that number. But yeah, 11 out of the last 12 days. That's impressive. And it's running extremely hot. So again, if you notice the theme about this live stream, it's to be cognizant of how hot some of these sectors are starting to run here, especially over the last few days. If you look at discretionary, just at a weekly chart, stochastics is at 95. If you look at it from a monthly, it's now getting into oversold as well, hitting 80. So it wouldn't shock me at some point between now and the end of the year if we see a substantial pullback. Now, the one thing that this market's doing that's really messing up a lot of people is that it's people are saying, okay, March is going to be the month where stocks just fall apart. And then they get into April and they say the same thing. And then when April doesn't fall apart, they get into May and then June. And now we're in July. And every month it seems like, okay, it's sell in May, go away. Or July, I've seen this. The second half is going to be brutal. Starting in July, everybody's going to have to start selling. Or when the debt ceiling gets fixed, you know, all of a sudden the Treasury is going to have to take money out of the markets to refill its coffers. All that stuff keeps happening, but the market doesn't fall apart. And that's where sometimes with our opinions, what we think should happen doesn't always happen. I mean, I was short, you know, in the beginning of the year as well, and the trades were not working out. And you have to be willing to adjust. It's kind of a pride thing. It's a blow to the ego. I don't like it. I didn't even want to get long. but I did, and I'm kind of glad that I have, because it's working out better, much more so than the shorts did. But you got to realize that while I think that I would be surprised if we don't get a substantial sell between now and then, I'm not going to take it to the bank. I'm going to keep playing it to the long side as long as it allows me to. And then when there is a breakdown and when the markets do start showing those signs, I'm going to try to unload those long positions to be able to maximize those profits on those existing trades. But right now, we're not seeing any signs of that. And that can be really frustrating. I'll highlight things like what we just talked about in the VIX, about there being a bearish divergence there possibly forming when you had the VIX up 0.5% today and you had the rest of the market up as well. But that's not enough to say, oh, the market's definitely done for. It's breaking down. You need to see a technical breakdown happen first. Okay, so let's get back to some of these sectors here and keep looking at them. Materials. This was the one on Tuesday. I was like, man, I don't know. This thing really psyched out a lot of people on, or it was, I guess it was about last week, right? On July 3rd, it had that nice follow through, and then it just tanked the rest of the week. Really blew up a lot of trades there. That was frustrating for a lot of traders. And and then kind of like with Google, we just go ramping right back up to where we were before. That's frustrating for anybody who, got stopped out and wish they hadn't now. I don't know if I really like this sector all that much. One stock I do have a close eye on, and one that I could see myself playing, is Monsanto. One of the things you want to make sure, though, is stocks like Monsanto, and I didn't check this, but I'll do it right now. You want to make sure that it's not reporting earnings in the next few days. Yeah, it's August 7th is what TC 2000 says it's reporting. So it's not reporting just yet. So we have some time. If this thing wanted to break out, maybe we can get a run to that 40 level. That would be really nice, but it needs to break out first. And we have a little bit of a head fake there just in the last couple of days. And we could even possibly say that we need to let this be the trend line going forward, or the breakout level going forward right there. And if it can break through that, then you have that potential for a nice move. Let's see. We talk about materials. Let's see, what else do we have here? Let's pull back up the sector list here. XLRE, real estate breakout. This one didn't do quite the thing that materials did to traders, where it went way below that breakout level. This one kind of just settled in right at the breakout level, and it's breaking higher now as a result. That one looks pretty good. One of the ones that I'm watching, PSA, you can see where it had a nice follow through to the upside today. Real estate's always hard to find really good plays. A lot of them are REITs, a lot of them are more dividend based, but when you can find a good one, that's always nice. Zillow, did you guys see this one? Bounced right off of that rising trend line. I mean, just amazing pop there. And then looking at Staples. Again, I don't see anything in Staples that says I would like it. I mean, you have stocks like Costco that are in Staples, and they've done pretty well. But by and large, I just don't see any plays that are really worth my time or my effort. Financials. We thought it might break out. But what was the thing holding us back? The start of earnings season. And yeah, JPM might report incredible numbers and it might send financials higher, but I don't want to be trading ahead of time in the financial sector when I don't know how earnings is going to turn out. So I avoided this one. Overall, though, is that breakout pretty nice? Absolutely. It's in this bigger part of a rising channel here, but there's plenty of upside if it wants to keep that run going up to 38. But I think once we get out of the next week of earnings with all the banks, I think financials, especially if it can pull back to this breakout level, might offer a pretty good opportunity. So for instance, this little blue line right here, if you could see price, maybe it's because of a couple of bad earnings reports, but if it could come back down to this 34.10 level, stabilize and start to bounce, that might be a good opportunity to get long. You could probably don't even have to wait for that, but that would be more ideal from a technical standpoint. Utilities, potential, but potential only gets you so far. It's got to do some more work here. It's got to get above this blue line, this declining trend line here. It's not there yet. So until it does that, there's really no reason for me to want to start loading up on it, because like we saw so many times with energy prior to it breaking out, it can get right up to this level at 67.76 and then just come right back down again, especially with the market overall very overbought. You could see some kind of a retraction there, which could take utilities down with it. Industrials have been amazing, absolutely amazing. And you may start be getting tired here, but from June, where it was trading at 95, this ETF is now at 108. That's about a 15% run for that stock, and that's really good for a lot of your industrial plays. But don't be surprised here, though, if it starts to settle down. I have a trade in Honeywell that's ongoing. It really didn't do much for me today, despite the fact the market was up. XLI only up 0.1% despite the S&P 500 being up 0.9%. So could there be ideally what I would like to see is some consolidation at these highs here. Maybe it can just work off some of these overbought conditions there with like a bull flag, or maybe it's like a continuation triangle there. That would be good. But I don't know if I'd be forcing new trades here at this point. What else do we have here? Healthcare sucks. I mean, it really does. I mean, it's just this declining trend line. It's got a higher low in place, but it can't make a higher high, though, to create a new trend. Every time it gets up to this declining trend line, it just falls apart. So why would I want to get into trades right now revolving around healthcare stocks? I don't. And also make sure you're putting any questions that you want me to look at. I see some here from Alan. You guys are kind of quiet so far, but I got some stuff from Alan. I got stuff from Ryan that I'll go ahead and take a look at here. But really good stuff so far that we're able to look at here so far. And with energy, that sounded like a word salad, right? With energy, you got the breakout. Really nice. We got the breakout on Tuesday when we were doing the last live stream. It's got above that 200-day moving average. Didn't participate in the rally today. Energy tends to march to its own drummer, essentially. It's highly influenced by the price of crude. So if there's a big sell-off in crude, there's a good chance there's going to be a sell-off in energy as well. But up about 4 straight days, would it surprise me to see a little bit of consolidation here going forward? You did see some strong volume today as well. So if you could get a pullback in energy, like I'd say if you could get a pullback to 82.27, that could provide a good bounce opportunity. One name that I'd be watching for is Chevron. This one has a double bottom here that's in place, a good dividend. If they could break out right here and keep that momentum going, I would love to see that. All right. Good to see you here, Ryan. Let's see what you got to say here. Can you go over Yale? Bought for a long-term play, familiar with the industry. Biden won't let them fail. LOL, up 26%. Scaling out, but no idea where the support resistance short-term is. All right, let's go look at this one. YELL. There we go. Play familiar with industry. Okay. All right, got a trucking play here. Industrials actually did better, up 16% today. It did phenomenally better than the industrial sector as a whole. But this is a stock that's trading at $1. So it's going to be a little bit harder to do some of the technical analysis on it because these things can be really finicky. You won't see me personally trade. I don't mind looking at the charts, but you won't usually see me trading stocks below $10 ever, just because the dependability on them can be so sketchy. But just trying to look at here as I'm like looking at this chart where some of the resistance might be. So you got 2 layers of resistance that I'd be the most concerned with. One is you got this declining trend line. This goes back to October. It's hit it on multiple occasions, rejected price. You can see it's hit it here, all the way back in February, and again where it started in October. That's the big resistance level there that I'd be paying the closest attention to. Volume looks pretty good over the last 3 days. That's a good sign, but it needs to get above also this 125 resistance and then finally push through, at around $1.51, that resistance level on that chart there. But this is one of those that it's probably really important to have a stop loss on. And boy, trying to keep a stop loss tight on this one, I don't know what to tell you because there's not a lot of room to keep one nearby. I mean, it could essentially just fart and stop you out. And that's no good there. But I mean, if it goes below 91 cents, that's a big drop. But if it did that, it would scare me out of that trade. Yeah, and NVIDIA, let me tell you, NVIDIA doesn't do anybody favors just watching it, because I got into AVGO. I'm not overly thrilled about that trade so far. I mean, it hasn't hurt me at all, but when I'm looking at AVGO, which had a similar continuation triangle pattern that NVIDIA had, and then you see the breakout of NVIDIA over the last 2 days, AVGO broke out essentially a day earlier. Whoops. And so that's the reason why I got in there, because NVIDIA was not breaking out yet. So I went into AVGO, but man, following day, NVIDIA broke out, and what a breakout that was, going from 427 to 460. But it has this massive gap here. Doesn't necessarily mean it has to fill it, but especially not even in the short term. But when you look at it over time, this stock can have some wild swings. And I think there's going to be more wild swings for it in the future. I mean, it would not surprise me if ultimately it fell back down to the 140 level, back to this rising support level, as it's done multiple times going back to 2019. It looks crazy to think that it would do something like that right in the here and now because of how well it's done. If you look at it from a monthly basis, I mean, there's just zero chill in this. It's got a 90, 93, 94 stochastics. It's got 93, 93, 94 on the weekly. So basically 94 on both the weekly and the monthly. And then on the daily, it's at 90. So very overbought. Strong volume, though, in terms of what we've seen over the last couple of weeks. It's definitely picked up a little bit. But yeah, I'm a little bit salty about missing that breakout on it. Alan, what do you got to say, man? Good evening. My long-term account looking really nice the last couple of days. Yeah, that's awesome, man. I know a lot of our accounts. I got to pull my face up a little bit here, huh? I know a lot of the long-term accounts are doing really well, especially those who've stayed in their positions. I know that my own long-term account's done really good. I mean, I've got a number of positions there, and they're all working out pretty well there. I've taken some profits, especially in some of the tech names. I just took the profits off the board and just stuck with my original position. But yeah, really phenomenal moves there. Marcus Padilla. Hey, Ryan, what do you think of UI? Let's look at that one. Wasn't sure if it's talking about the user interface or the actual stock. All right, so UI. Well, what do you see right here? This is what jumps out right out of the gate to me, and I think it's a pretty good looking chart. I'm going to add it to my watch list going forward here. That looks really good. So what I like about that one is this cup and handle pattern. You have a really clear cup and handle, and I'm seeing these in a lot of stocks right now. Some of them I'm seeing at all-time highs, some of them I'm seeing at a basing level, but this looks pretty good. What does it look long-term? I mean, you got a broken trend line there that got destroyed a while back. I don't know. Honestly, I don't know if I would pay too much attention to that from a personal standpoint. It could come into play, but right now I'd be more focused on this cup and handle. And then if it does break out to the upside, probably this 222 mark. Really intriguing chart. This is probably one of the more interesting charts I've seen today. But I think you got to wait for it. I mean, the hardest part's going to be playing a stop loss on this one. I don't really want to play a $16 stop loss. You're getting close to 10% at that point by putting the stop loss below the part of the handle of the pattern. You can probably push it up a little bit more. But what I would like to see is some consolidation that makes it more worthwhile. So if it doesn't break out tomorrow and can consolidate, that would be great. If it does break out tomorrow, then maybe we wait for the pullback, if there is one, to this support level and then try to play that bounce off of it. But the real key of whether or not I would play something like UI, one would be, is earnings coming up in it? If it's not, can it pull back, or can I get a good stop loss on it? Because I do like the chart a lot. I just not sure how well it's going to be to play the stop loss, or where to put the stop loss based on what we're seeing currently with the chart. Good stuff, man. Robin Gray, how do I private message you? I'm a member of your YouTube subscription. Yeah, you can private message me. Just go to ryan@sharepointer.com. I'll see it there. Love to hear from you. And you can do it there. I'll read all those messages. Overall, pretty quiet crowd today, so I'll get going on this one. But as we're looking at the charts, as we're seeing the market just steam higher, make sure you're looking at opportunities. Okay, what would make sense here to start taking profits? Is this particular stock getting extremely stretched to the upside? Maybe you're in a stock like Rivian where it's gone through the roof, and that's great if you are. But start asking yourself, would it make sense to take a third off or a half position off, or just raise that stop loss some? There's all sorts of different approaches to being able to manage the risk. You just want to make sure that you're thinking about managing the risk in some way or the other. So that's the big deal. That's the big thing you want to be cognizant of going forward with this market, because it wouldn't surprise me if next week, if we did see the market pull back a little bit. If so, I want to make sure that I'm taking profits along the way, or where I can. And if the earnings don't come in according to what people are expecting, it could get even more volatile. So keep that in mind. Make sure, if you're a member of the YouTube service, click join down below. You can get more of my videos that I do each and every day. It's like 2 videos a day usually. And then I do watch lists and different stocks that I'm following. Plus, you can go to just swingtradingthestockmarket.com if you want. It's the same thing, same price. and you can get more of my videos there as well. Same videos though. What else am I forgetting about? I don't know, but make sure to like, subscribe. It means the world to me. Thank you. God bless.